What's up everybody? Welcome to the Stocks channel. My name is Cory and today we saw the S&P 500 and the Dow Jones closing at brand new all-time highs. We still see relative weakness in the tech sector, but tech could finally be done correcting and going back into a bull market, which we'll get into in a lot of detail in tonight's episode. So first up, let's take a look at the NASDAQ 100 QQQ ETF. So let's crack open this chart and see what's going on in the stock market today. A real quick update about the Stocks channel Discord is I do have the Stocks channel hot stocks currently set up with this format shown here. So I'm giving you the support levels as well as the price targets, and I'm also giving you the level that if we do get a close below, it's no longer a hot stock. So right here you can see that on March 8th, which was Monday, I did issue Palantir as a hot stock with the buy levels of 23.30 and 22.40, and as of the close today, we're already up over 20% on this hot stock. So if you're interested in trading hot stocks and you want to get in on the ground level, the Stocks channel Discord is where you need to be to get this information. You can also see on the left that I also have channels for the $1,000 account challenge that I'm doing, my technical analysis, my intraday updates, as well as other trade ideas. So if you're interested in the Stocks channel Discord, you can find out how to join by clicking on the link in the description of the video. Alright, so jumping back over to the QQQs, we saw the price action going down 0.81% today. Intraday we had a lot of volatility, and at one point we were all the way down around 311.50. You could see the price action close over top of the 5 EMA as well as the 13 EMA, but we did fail to close over top of the 50 EMA. So remember that bullish price action on the QQQs would be price action closing over the 50 EMA as well as the 20 simple moving average. But after this deep correction, we're not quite there yet, but we are starting to get some short-term bullish price action. We're closing over the 5 EMA as well as the 13 EMA, and yesterday we did close over the 50, and we could be trying to close back over the 50 EMA very soon. You can see we also got 2 days in a row closing out of our resistance trend line, which means we're starting to break out and we could be going back into a bull trend if the price action can continue to climb higher from here. So the number one thing to watch would be a close over the 50 EMA right around 316.60, and then the next step will be closing back above the 20 simple moving average, which is right around 319. So we're going to spend some time in the 1 hour chart tonight to really break down the price action and see the exact moves that we're seeing day to day. So on the 1 hour chart, you can see that we were tracking this resistance trend line, which is a downtrend because it was suppressing the price and it was causing the QQQs to form lower highs. So ever since we broke out above this trend line, we were looking for that retest of the trend line as support. Well, the good news is for the bulls with today's price action, we did get that confirmation test of that support and we did start to get a bounce. So this is the step in the right direction for bullish price action because you can see we're forming higher lows as well as higher highs on the 1 hour chart. Now on the daily chart, we still have some work to do, but remember that everything happens day by day, step by step. So on the 1 hour chart, we're starting to see a bullish pattern forming, which means that we could start to see that bullish setup on the daily chart next. So if you're on the Stocks channel Discord, you already know that I issued the QQQs a buy today, and it is bullish above this 311 level. So when I saw this bounce and I saw the breakout of the resistance yet again after we did test it as support, I did give a buy signal for a long trade on the NASDAQ 100. Now if we start closing back below 311, that buy signal is canceled out and you're better off just taking the loss on this trade because we could be going much lower. However, it's possible now, ever since we got this back test of support and we're bouncing, that we could come back up towards this next price target around 319. This is pretty much a 320 level if you round it up, and we're trying to take out this previous high. Once we get an hourly close over the previous high at 320, now we're starting to get into another higher high territory after putting in a higher low. So the bull rally is continuing and we're building momentum the higher the price action goes and the longer we stay above these support levels. We also had a resistance breakout of 314 and we did hold up and close above that level at the end of the day. So the price target I have on the QQQs right now is at 320 and 322, and I do think we're heading towards that direction. We did get that finish of the correction on that ABC, and it's possible that we're going back into an impulsive bull rally. So what the price action would look in the impulsive bull rally is that we formed wave 1, completed wave 2, we already put in the top for wave 3, we came down and tested support for wave 4, and now we're going up to 322 for wave 5. This is the bullish scenario, and if you're on the Stocks channel Discord, this would go in line with the first bullish scenario I gave as a possibility after the correction. This Elliott wave pattern would be the impulse of wave 1, and it would start us towards new all-time highs in the very near future if this pattern does continue to play out. So if we start getting QQQs levels of 320 and 322, that's going to be our price targets for the time being. Now if we start breaking out over 322, we're going to start looking up towards the resistance levels at 327 and the gap fill around 330. So this is the bullish setup that I currently see as long as we maintain price action above triple Q levels of 311. Now, just to give you something else to watch for is this still could be a false breakout. We did get a breakout and we did get a confirmation test and a bounce, but that doesn't mean we can't break right back down through 314 and fail to hold up above 311 and head lower. So if we see price action go below 311 and then possibly a bounce and retest of that level as resistance and a continuation of the downtrend, then that would mean that this was still a bull trap and it's likely that we're going lower. Now remember, the price action is going to tell us which of these scenarios is going to play out. And right now, the price action is actually favoring the scenario where we're heading towards 322. So I'm giving you both scenarios just in case something does turn against us. You're well prepared for either scenario. That's why I'm saying that I'm getting out of this market below 311 because I would expect to see much lower prices if we start closing back below those levels. So hopefully that makes sense. And if you followed me along all week long, I really hope all of these episodes and watching the price action play out with the scenarios I gave you is really helping you understand when to enter a trade and how to manage a risk. Remember that I'm all about discipline and I'm all about following the technicals and following the price action and trying to be on the side of the trend. If you can learn these skills now and you can maintain a disciplined strategy and you follow that strategy, you can easily remain profitable as a trader in the stock market. However, you have to remember that it's going to take a lot of discipline and it's going to take a lot of patience, and there's no shortcuts in the stock market if you want to be a profitable trader. Get a strategy that works and just stick to it and try to hold yourself accountable. So going back to the daily chart, I do want to give you some critical support levels and critical resistance levels to pay very close attention to. Critical support levels are going to be 311, and if we break below that, I'm looking for a retest of 306 and possibly even lower if that level does not hold up. To the upside, we still have to break back above the 50 EMA, which is right around 316, and then we will have critical resistance at 320 and 322. If we break above 322, we're looking up for a price target of about 327. So those are your critical levels that you need to watch on the triple Qs, and don't forget to watch the price action at those levels because that's going to be the ultimate decider in how this market plays out. Next up is the S&P 500 Spy Etf, and we saw the S&P 500 only inching up about 0.13% today. We're coming right back into the previous all-time high right around 394, and this is another all-time high on closing prices. So SPY is still looking bullish, but we're going to struggle around this resistance level around 394. Remember, if we start breaking over 394, my next price target is all the way up here at 404. So we still have upside potential in this market and we're starting to develop bullish trending. You can see all of these moving averages are going back to stacking to the bull side, which means the trend is now going to be in the favor of the bulls, and that's a buy the dip market. So if we do see dips off of these levels, that's actually going to be a buy the dip scenario now that we're going into a bull trend. We're forming new all-time highs, we're going into a bull trend, and the price action is confirming bullish because we got that breakout of the downtrend and we did get those tests of support. So on a 1 hour chart of SPY, you can see that we broke out around 389 and now we're holding up above the 20 simple moving average on the 1 hour chart. That's the momentum moving average, and we're not even coming all the way back down to our support level at 390, we just continue to climb higher. So if the price action could break over 394 and continue to climb towards 404, we may not even get the back test of the breakout like we're seeing on the triple Qs. That's completely fine because we see other sectors in the S&P 500 that are very bullish, and if the tech sector is going bullish as well, that means the S&P 500 won't actually get that pullback that it needs to test that support level. That doesn't mean that it's a false breakout, it just means that it's a very bullish market and it won't actually see enough selling to come back down to support levels. So you can see from the 1 hour chart on SPY that we definitely have higher highs and higher lows, and we're in a very strong bull trend. So we're in bullish trending on the 1 hour chart as well as the daily chart, and don't forget that the daily chart carries more weight. So if we have a bull trend on the daily chart, this is definitely a bull market that we don't want to get bearish in because the price action and the trend are now confirming the bullish scenario. Remember, if you were following me all week, I gave you both scenarios, and I'm telling you right now with the closes we got today that the bull scenario is in the lead, and until we see something shift, we need to start leaning towards the bull scenario to better prepare ourselves to be successful traders. So back to the daily chart, the critical resistance levels I want you to watch are 394 and 404. Support levels I want you to watch are right around 390, the 20 simple moving average at 387, and then if we break down below that, we're likely retesting 384 and the 50 EMA right around 382. 381 is the critical support level that if we break below, which is also the 50 EMA, that you need to start looking at bearish outcomes in the market. But we have a ton of support before we get to those levels, so right now you really need to pay closer attention to the 20 simple moving average, which is going to be somewhere around 388 with next week's open. On the Dow Jones, we closed at brand new all-time highs today, and I did have that price target at 327 that we blasted right through like it wasn't even there. So I went ahead and added another price target on here, which is right around 328.50, and as you can tell, that was actually the resistance level we closed at today. So we blasted through 327 and closed right around the next price target at 328.50. If we break over 328.50, my next price target is all the way up here at 336. So you can see the Dow is looking very bullish and it continues to climb higher, forming all-time highs day after day. So this is not a market that you want to get bearish in because it's still going higher, and the price action and the trend are telling us that it's actually picking up momentum. We can see all of these moving averages creating separation, and they're all very positive sloping. Of course, we can still get a dip, but again, when you're in a bull market with a bull trend, it's a buy the dip market, and it won't last long before bulls step in and buy up the dip and drive the market even higher. So your critical resistance levels are actually all-time high territory, which are just the price targets. So we still got to watch 328.50 until we close above it, and 336 is above that. Downside support is going to be the previous price targets at 322 and 320. If we break below 320, we're likely going to retest the 20 simple moving average around 317. Of course, if we break below the 20 simple moving average, come all the way back down to the 50 EMA, which is right around 312. Remember, that's a lot of support levels we would have to break below, so it's not likely we're going straight to the 50 EMA on a pullback. Next up is the Russell 2000, which a lot of you have been asking me to add, so it's finally here, and I'm sorry for the wait. But on the Russell 2000, you can also see we're forming brand new all-time highs, and we're blasting through my price target at 233. Above 233, my next price target above is going to be $240. We're in a bull trend with bullish price action, so again, we're seeing a very healthy bull market across the board right now, and it does look like the tech sector could also be bouncing and getting ready to go back into a bull rally. So we'll have all of the indices in a bull market yet again very soon, and it's very possible we see brand new all-time highs across the board. Downside support levels for the Russell 2000 are 227, the 20 simple moving average at 223, and below that we have one more support level at 218. On the Arkk ETF, we went down over 1.5% today, and we closed right on top of support, which is right around 124.60. Upside resistance is still actually going to be our resistance trend line, because on a 1-hour chart, we still have failed to break out. That resistance level does go down each and every day that we fail to break out, but it's currently sitting right around 127. If we break out of this resistance trend line, don't forget it's possible we come back down and test it as support before we head higher. Upside resistance levels on Arkk are going to be 135 and 142 if we do get that breakout. Downside support is going to be 117 and our support trend line around 112. And below the support trend line, we have another support level around 105. So remember, if we fail to break out, you're looking for the bearish scenario and you're looking for more support levels to try to hold up. The more support levels that break down, the more bearish Arkk becomes. So if Arkk is going to get bullish, it needs to break out very soon and join the rest of the indices in the bullish rally party. Next up is the VIX, which is our fear indicator, and we saw the VIX getting absolutely obliterated today, going down over 5.5% and closing below that support level at 21.5. So remember, I said the VIX is a fear indicator, and if the VIX is heading lower and blasting through support levels, that means fear is leaving this market and we're likely going to see brand new all-time highs. That's exactly what we saw today with the VIX going lower and the S&P 500, the Dow Jones, and the Russell 2000 all closing at brand new all-time highs. Now the next support level is 20, and if the VIX blasts through 20 like it's not even there, we're going to see a lot more money jumping into this market because the fear is now off the table and everybody wants to be part of the stock market. So this VIX level of 20 is going to be very critical because it is a support level, and if it breaks down, that is a very bullish sign, which means we could see much higher prices. Now that we broke down below support at 21.5, that level could act as resistance. On the 10-year Treasury note, we saw it going up 7% today, but I really have no comment on the Treasury notes because we'll see it in the price action and we're following the technicals and the trends. So while this is a concern for a lot of you, I don't really care what these rates are at because if they are bearish for the stock market, we're already going to see it in the price action. But right now you can see the rates do look like they're going into a possible resistance level, and we're still in a very strong bull rally. Whether or not that's going to impact the market at some point is to be determined, and I really don't care to comment on something when I'm already following the technicals anyway. On the US dollar, we did see a bounce today, but we're still holding down below resistance. Remember, the US dollar does look like it's going into a bull trend, but it's still relatively weak. If the dollar starts breaking back above these resistance levels and starting to look stronger, it could start impacting the stock market. But right now, we just need to keep an eye on it. On gold, we continue the slow climb towards the price target at $17.61. On silver, we're cooling off a little bit, but the price target is just above at $26.50. On Bitcoin, we got very close to my price target at $58,500, and we did start to see some selling. We're still holding up above support, and we're still in a strong bull trend. So it does look like Bitcoin's going to continue the hike higher, which don't forget means it's also bullish for the stock market. We want to see all of these markets being bullish and all moving to higher highs and new all-time highs at the same time. When all the markets are in sync and they're all bullish, that's how we know that we're in the right side of the trade, and if everything's bullish, we want to be bullish as well. So I still have a price target above on Bitcoin if we break that level at 62,500. Remember, as long as the price action and the trend are bullish, we are also going to remain bullish. On Amazon, we dropped about 0.77% today, and we're closing right below resistance at 30.90. If we could break over 30.90, we're likely going to retest the 20 simple moving average at 31.30. Above there, we have one more resistance level, which is right around the 50 EMA, around 31.60. Downside support is 30.33 and 29.50. On Tesla, we came right into resistance today, which is right around 6.95, and failed to close above it. We're still on a bear trend, but the price action is still closing over the 5 EMA, and it looks like we possibly could have seen a bottom and we're starting to bounce. We'll watch the price action very closely because we still need to see a close over the 20 simple moving average and the 50 EMA. Until we get those price action closes over these moving averages, we don't want to get too bullish on Tesla just yet. Downside support levels are still 618, and below there we have a support level around 550. On Apple, we dropped about 0.76% today, but we did hold up above that support level at 120. If this support level does hold up, it's possible that we don't see Apple dropping to my price target at 114. But it's to be determined because we're still in a strong bear trend, and Apple has a lot of work to do to get this chart to be looking bullish again. We have to get price action closes over the 20 simple moving average and the 50 EMA, which is now all the way up here at 127. So there is a ton of resistance on Apple before we get bullish, but it's still possible we come back down lower and come back down to this 114 level. So watch support levels at 120, because if it doesn't hold up, we could easily come down to this price target at 114. Upside resistance is going to be around 124 and 127. On the financial sector, we continue to go bullish, going up over 1% today, and we're still in a very strong bull trend. On the industrial sector, we went up 1.34%, still over the 5 EMA, and still in a very strong bull trend. On energy, we went up about 0.21%, still over the 5 EMA, still in a bull trend. On healthcare, we went up about 0.25% today, and the price action is closing over the 20 simple moving average and the 50 EMA for 2 days in a row. We're building up some bullish momentum slowly but surely, and it looks like healthcare could be ready to go back into a bull market in the very near future. This is a step in the right direction because we're also seeing something similar taking place in the tech sector. So going back to the S&P 500, you can still see that we have a lot of bullish sectors. The financials, industrials, and the energy sector are still looking extremely bullish, and we continue to see most of the indices going to brand new all-time highs. So once the tech sector and the healthcare sector decide to join the party, we're going to see much higher prices in SPY, so continue to look for a break of 394 and SPY to start climbing towards 404. Those are our price targets, and those are where we'll start looking for possible corrections yet again. But right now, the market clearly wants to go back into a bull run, and it wants to see higher prices. The price action and the trends are speaking for me, and this is not my opinion. Remember, we're doing objective analysis, and we've been following the price action and following the trend this entire week. A lot of you that are on the Stocks Channel Discord know that the intraday updates have dictated what this market does, and we've been following it step by step, and we've stayed on the right side of the trade the entire week. That's how you remain disciplined and profitable in this stock market, and that's how you develop a trading strategy that allows you to remain profitable no matter what the market's doing. So if you're interested in my intraday updates or joining our trading community, come check out the Stocks Channel Discord. You can find out how to join the Discord server by clicking on the link in the description of the video. Next up is our hot stock, which is still Shopify, ticker symbol SHOP. So we're still chopping around between the first support level and the first resistance level, and the support levels are right around 1111, 1080, and 1035. Resistance levels are going to be 1133, 1203, and 1260. If we break above 1260, we're looking at 1360 and possibly the gap close at 1360. So there's still a lot of upside potential still in this hot stock. Remember that if we start closing below $1,000, this is no longer a hot stock, and it means we could be going lower. So still watch these support levels very closely, and remember that you're looking to try to buy off support levels and sell at resistance levels, and depending on how aggressive you are is going to depend on how long you're willing to hold this trade to see if you can get through more of these price targets. Don't forget there's more hot stocks on the Stocks Channel Discord, just like I showed you in the beginning of this episode. So if you're interested in more hot stocks, come check us out at the Stocks Channel Discord. So happy Friday, everybody. I hope you have a great weekend. Thanks for watching, and as always, I will see you in the next episode.